First tonight, the super spruikers. Investing in property with a self-managed super fund has ballooned into a multi-billion-dollar business since the law was changed. But alarm bells are ringing, with the regulators concerned at the way that some of the less scrupulous schemes encourage people to set up funds and then borrow heavily to buy property. One insider's told us it's a ticking time bomb. Our chief reporter, Andrew Robertson, investigates.
At $1,475,000. Bid now for the third.
It's the latest gold rush in financial services. 6 years ago, the Howard government lifted the ban on superannuation funds borrowing money. Now there's a stampede of self-managed super funds into property.
We don't want this to become the new playground for dodgy spruikers. We don't want SMSFs to become the vehicle for choice for inappropriate property investment.
Want to buy property in your super?
The legitimate players all see the opportunity to make money in this space, but so too do those of less repute.
Since 2007, since super funds were allowed to borrow, the number of property spruikers that have come into the industry would have increased probably by a factor of 10. There'd be 10 times as many property spruikers now than there were in 2007, and that's conservative.
Neil Jenman has spent the last 25 years exposing the cowboys in the property industry. He says the ability of super funds to borrow and the lure of Australia's $1.5 trillion pot of superannuation money have proved irresistible.
They come across like smart, clever, sophisticated, intelligent, trustworthy people. But they don't come across like crooks.
It's estimated that self-managed super funds have nearly $80 billion invested in direct property, with borrowing by SMSFs growing at around $1.5 billion a year. That in itself isn't bad, but it's the role of the spruikers which is concentrating the mind of regulators like ASIC.
They're encouraging people to set up SMSFs to invest in property in ways that may be completely inappropriate for the investor, and they're not explaining the risks and the issues involved in investing in some of these areas.
Basically, people can now borrow up to 80% mortgages in their super fund. So if they've got $100,000, they can purchase a $400,000 property in their super fund.
Matthew George from Melbourne-based property and finance firm Money Choice is one of the people ASIC was concerned about. He's been banned for up to 8 years for what ASIC says is putting his own interests ahead of his clients and for giving advice he wasn't licensed to give. ASIC has others in its sights, including Queensland-based Active Super, but stopping the spruikers is a huge task.
There is one Gold Coast company making 22,000 cold calls a week. And the cold call starts, how would you like to save tax and pay your home off quicker? Wacko. Well, to see if you qualify, one of our consultants will come to your house. And qualifying means you have a job and equity in your home. The next thing is a 6-hour brainwashing interview, which ends up with you buying a property from them.
As well as this high-pressure sales approach, the tactics of the spruikers include property with inflated values, guaranteed rent, which in effect is paid for out of the inflated price, and high commissions for all the services the spruiker provides in what's usually a one-stop shop.
This is the typical arrangement for these sort of deals, is that you're sold a property and they might say, well, the property is this, we're going to give you a discount. And so you feel like you're getting a significant discount. If you were to get an external bank to value it, they would value it even lower again.
I spoke with one of Claire Mackay's clients who didn't want to appear on camera. He's a highly educated, financially literate company executive, and it's a measure of how plausible some of the property spruikers are that even he was drawn in. He was approached by a company called Trent, who urged him to set up a self-managed superannuation fund to buy 2 properties in Queensland and 1 in Melbourne, they said, were worth $1.3 million. Fortunately for him, he sensed all wasn't right, and he broke the golden rule of the spruikers and got some independent advice. The fact that they'd tried to put her client into a single asset super fund raised alarm bells for Claire Mackay, who went searching for information about Trent on the web.
It took me to something like 15 or 16 pages of Google to find out more than just guru property experts revealing the secrets.
Because spruikers are good at flooding the web with positive material to keep the truth from coming out. What Claire Mackay found out was that Park Trent has been involved in lengthy court battles over accusations it ripped people off. It's also been accused of failing to pay its employees superannuation. The founder of Park Trent points out that he won the court case on appeal and eventually did pay his employees super, and he rejects the property spruiker tag.
We have a huge property management portfolio, huge finance portfolio, we do construction ourselves. We're an icon, we do a great deal for Australia, and to call us anything other than a business enterprise, I think that's a cheap shot.
Cheap shot or not, property crusader Neil Jenman says he receives one complaint a month about Park Trent selling properties at inflated prices. The bottom line, though, for dealing with any property company is do your homework and read the fine print.